All right. So welcome to day 11 of this teaching. All right, we have really talked about a lot of things. We have really gone far and we have really gone deep. All right. So today's call is just a continuation of yesterday. Yesterday we talked about order blocks. I defined what order blocks are. I defined how to identify. I explained how to identify order blocks on the chart, identify how they are used, and identify how to spot them and how to use them. I say that an order block must always be in line with the trend of the market, and an order block must have some level of displacement. Right, just to reiterate that fact, I say that if the market is bullish, you want to be buying bullish order blocks, right? So the market is bullish, you want to be buying bullish order blocks, right? You want to be buying bullish order blocks. Not that you're trying to sell a bearish order block in a bullish market. So the market is bullish, you're trying to do what? Buy those bullish order blocks, right? You want to be buying what? Those bullish order blocks. So you want to be buying it's not that you now go and begin to be trying to sell this other block that you say because you saw another block there. You're not going to go and try to sell. That is not what I taught you guys. I taught you guys that number one, you must look at the trend. The other block is just a reduced entry, right? It's just a way to press to make your entry precise, right? Other block is not what you should be entering on any opportunity you get, right? You must understand the trend of the market, right, before you use other blocks, right? And then you must see some level of displacement, right? You want to see the market displace it from the other block nicely before taking out structure, right? So now I want to talk about, okay, before I talk about a very simple trading strategy you can use with other blocks, right? We're talking about strategy today. Today we're talking about BMS break of structure plus return to order block, right? So that's what we're talking about today. BMS plus RTO, right? Break a market structure plus RTO, right? That's return to order block. That's a very simple trading strategy you can use. If that is the only thing you use, then that would be very, very fine, right? So let's talk about one other thing before we continue. Now let's talk about proportion blocks, right? I learned this from the inner circle trader. So credit to the ICT. Before I continue, I learned this from the inner circle trader ICT. So let's talk about before we go over to the main topic, let's talk about some proportion blocks. All right, so proportion blocks are similar to other blocks, right? I want to use a moment to talk about proportion blocks. So a proportion block is similar to an order block, right? So let us explain. So a proportion block, let's say that we had an order block here, right? The market came into the order block, market creates another block and then comes back and then tests it and then maybe we buy here and then make a new high, right? Now, this candle that tapped into the order block is what we refer to as a proportion block. So this new candle now that tapped into the original order block is what we refer to as a proportion block. So a proportion block is a candle that taps into an order block and proposes price higher, right? So it is acts like a fuel to the existing intent in the market. So the market is bullish. When market taps into another block and then moves away, that candle that moves price away from the other block is what we refer to as what a proportion block. It's an ICT proportion block. So proportion blocks are similar to other blocks, just that they are other blocks within an other block. So understand that a proportion block is an other block inside or on an other block. So it's like a layer upon a layer or a house upon a house. So that was a proportion block. So it's this other block that is on a previous other block. That's what the proportion block is. It's an other block on a previous other block, right? Or an other block inside a previous other block. So this line becomes what your proportion block. So let us quickly look for one example before we continue. Let's quickly look for one example of that. All right, let's look for just one example quickly of proportion blocks, right? So now let's look at this. Let's look for a clear example now. All right, I see it. So this is a proportion block now. Watch this. Look at this other block here, right? You can see this other block here. What do you have here? You see what? This candle tapping into what? This previous candle. So now this candle now becomes what? A proportion block. So that one simply is You have another block here already. This candle tapped into the other block and then made a new high. So this candle becomes what? A new what? Other block. Right? So this now becomes what? A proportion block. Right? That's what it simply means. An other block inside an other block. That's what a proportion block is. Very, very easy. Look at this one here. We have this other block here, right? And then you can see how this candle tap into the other block. So now this time becomes what? A proportion block. Why? Because this block tapped into the previous block. And this block also tapped into this previous. So we all had proportion blocks here. So look at this block here. You can see this, that we are all having proportion block here. So we have this first proportion block. We had this second proportion block. Right? You can see how this is pan out. That's what the proportion block is. It's simply an other block inside or on other block on a previous other block or inside a previous other block. It's a very, very simple thing to identify, right? So I think I've explained that quickly so you guys understand what that is used for. Now let us go over to the next point or the next lesson, which is what a very simple trading strategy which you need. Right? If you can understand this, then this is just a very simple trading strategy. It can be used on the lower time frame or on the higher time frame, right? So let us break or short plus RTO. Right, very, very simple trading strategy, right? Very, very simple trading strategy. Very, very simple. Right. Yes. Right. Break or structure plus return to other block. What it means? It means break or structure plus return to other block. This is a very simple trading strategy. Very simple trading strategy. Very simple. Very, very simple trading strategy. It's very simple. Just understand this. Now, for you to make use of this simple trading strategy, even easy trading strategy, right? Very easy. The way to utilize this strategy is number one. There are three things you look at to utilize this trading strategy. Number one, you must see what you must see what you must look at. You must identify the trend of the market. So the trend must be in place. Next thing you must look at is for what? A break of structure, right? So this is it. You must see what's a break of structure, either a change of character or a break of structure. Next thing you must identify is what? A displacement. I want to say displacement, and then one of the things you look out for, I want to say displacement, and then what is the next thing you look out for when you're looking using this? There's one more thing you look at. One more thing you look at. All right. So the next thing you look at for is what? The final thing is what we call what? You're not looking for what? The order block. On with the order block. All right. So these are the things to look at for. So number one, you must look at the trend. Number two, the break of structure. All right. So you look at the recent break of structure. So you look for the recent break of structure. Right. So you look at the recent one. So the recent break of structure, the recent one. Right. The recent one, and then the displacement, and then on with the other block. Very, very simple. So what do I mean? Let's say the market is bearish now, or the market is bullish. The market is bullish, right? And then we saw high, then we saw this break. Now, number one, market was bullish, okay. Next thing what happened is what you had was a break of structure. So this time because was a break of structure, market did what went below what this swing below here, right? So now have what a break of structure, right? So break of structure right there. Next thing is that the session? Yes. Once the difference means market breaking the low and remaining a bit below it. Not it's not a week. Once the market close below the low, very strong, and then start returning. Then the next thing to do was to look for what the other block that's led to this break of strong. So you look out for the other block that led to the market being what bearish. So you look at that on the other block. This is because of your POI. So this is how you trade it. So once you have your BOS and RTO, so now the market's coming back to that point, something like the factors our RTO, then to other block. So market has to return to that other block, right? So now this is becomes where you want to take your sell. So that's your area of sell, right? Your area of sell is this area because why it's on with the other block, right? So you can simply put your short positions there. This one becomes your area of entry. So you can maybe take your surplus above it and then your target demonstration slow. So this one becomes your trade setup. Very easy to spot and very easy to utilize. Right? Very, very easy to spot and very easy to utilize. I love this. I used to love this trading. If you can understand this alone, you don't need any other thing you're trading. If you can understand only this, you don't need any other thing you're trading. You don't need anything else. If you can just use this simple strategy, look for the recent break, look for the all-related break. That is all. You don't need any other thing. If you can just use this as your trading strategy, then you're good to go. This can just be used as your only trading strategy. BOS return to RTO. That is all. That is all you're using. Also, you can also see it in the form of a trend. Like as the market is trading bearish, right? When the market makes a new low, and this becomes what? A break, right? So the market is still bearish here. So you can see the break here. So now this now becomes what? Your other block of interest. So you can highlight that to the future. Right, this other block here. And then what can you do? Can I short this so suppose above the high? So that is also another one. So this one is in the case where the market is already trading down. Why this is in the case where the market was changed from bullish to bearish? The market took a last swing below and became bearish, right? So it's either this way, the market is already trading down, it makes a order block and then looks a new low, then you look for sales here, or this way. All right. So don't worry, I'll teach you guys about inducement because sometimes this I know sometimes the market will take you out before we drop it. So I'll teach you guys about inducement and liquidity. Don't worry, don't worry. So let's just go to Richard and look for examples on this so we can wrap up this particular call. Right. So it's all over the charts. All over the chart. This one's all over the charts. Right. So let's just quickly look at it. All right. So all right. All right. So what do we have here? All right. Look for a good example here. Okay. All right. I've seen a very clear example here. So watch this. See a very good example here. This market is this 5 minute chart, bro. What's here? We had what's a break of structure here. Okay. Can you see what I'm say? This is a break of structure. We had the break of structure here. What do you have here next? RTO. So this other block is the entry. Can you see it? Very simple. Break of structure, return to that block, and then what? It dropped down. Right. That's very, very simple to spot. Market was bullish. It changed from bullish to was bearish, and then it came to that other block and then what? Dropped to the ground. Right. So the same thing happened there. So market did what? Did the same thing here. Had a break of structure here. Right. Market came back to what? To RTO. Right. So this was the other block here. Market came back to. So this other block here. You can say market broke structure, came out to the RTO and then was bought. So that is how this is occur. So look at the most recent one. The most recent one is look at this one. So market was already trading bearish. So market broke this low. Well, what happened? This other block, right? So market came out to us. This other block here. This was the other block that was non this. So we had what? This beautiful sell for me. Break of structure, RTO, beautiful trade, right? So that is not simply how to trade RTO. You look out for that on with the other block unmitigated simply means the market has not tapped into it. So you can see that the market broke down. There was no tap. Market did not tap into the candle. So as markets came down, they returned towards the other block. That's your RTO. You collect for yourself. Very simple trading strategy. If you can identify this, you can really make a lot of money. Right? You must always consider the trend and all of those phone stocks. Right? So let us look at a different pair this time around. Let's look at GJ. Let's look at GJ. Right? Let's look at okay, let's use Ethereum. Right, let's use Ethereum. All right, so I think we should also reset this. All right, let's use a 15-minute chart. But Ethereum is printing crazy, crazy, crazy. Look at it here. The same thing we had was a break of structure. The market broke this low. Remember, I used break for both change of character and I used to use the same because still a break. Market broke this low. Where is our own other block? I think it's this one. This candle, okay. This candle was not really tapped into. So that's another block there, right there. So you can see markets came out to the other block there. You can see very beautiful trade. And right, so you can see this other block. That was the last candle that was not indicated. So markets came back to that candle there and then dropped towards the ground, right? That's how another block prints. Very, very easy to spot. Very, very easy to spot. Very, very easy to spot. Just look at the most recent break and identify the other block that led to that break. See another one here. Market it was broke lower. Market broke lower. What happened? This other block, right? So this is the last other block. This other block is the last one here. This is it. So can you see this? Basically. So this is just very easy. Once the market breaks structure, wait for the candle, the most recent other block that was not indicated. That is how to identify other blocks. This setup is very, very easy. It can be used on whatever chart you use, the synthetic indices, whatever you want to use, right? So I want you guys to make sure that you like this video, subscribe, and watch the previous session, watch from the day 1 to day 10. So before you come over here, so you can have a better feel for what you are doing here, because everything that you is built up on the previous lecture, right? So you cannot really make sense of this if you haven't watched the previous one. So take your time, watch from day 1, day 2, day 10, and watch it 2 times. And don't forget that these videos will be taken out, we're taking away from November. On November 30th, we are bringing down all these videos. We'll be transferring it to our paid mentorship. So we're giving you 1 month to access this for free. So we're going to be moving all this to our paid mentorship from the 10th of November. So this is just 12th of October. I'm giving you guys enough time. So you guys can have 1 month and 2 weeks to watch all these videos. Right? Having 1 month and about 2 or 3 weeks to watch all these videos. So this is just October 12th. So you have 1 month and about 18 days to watch all these videos. You have a lot of the videos are not so long, very, very short videos. You can just go through them in a matter of hours, right? So have a wonderful day. See you guys in tomorrow's teaching. Cheers and God bless. Don't forget to like this video, subscribe, and I will see you guys in the next video.